Hey everyone, we love to explore those companies that seem to defy the odds, those that keep growing no matter what the economy throws at them.
The ones that just seem to keep winning.
Exactly. We're talking about evergreen retail stocks. The ones that just kind of laugh at the so-called retail
A
apocalypse.
fascinating corner of the market, for sure.
Totally. And get this, there's this Motley Fool article that claims there are 3 evergreen retail stocks that you should buy like there's no tomorrow.
Sounds like a bold claim.
It is. It's literally called 3 evergreen retail stocks to buy. Like there's no tomorrow. I mean, come on, it grabs your attention, right?
Catchy, for sure.
It was published on February 12th, 2025, so it's pretty recent.
Hot off the press.
It's about Walmart, Amazon, and Costco.
Big names, for sure. But are they really evergreen?
That's the big question, right? I mean, I'm a little skeptical.
Healthy skepticism is always a good thing.
So today, our mission is to kind of figure out what makes these companies tick. See if their success is actually sustainable and what we can learn from what they've been doing.
Sounds like a plan. I'm ready to dive in.
Awesome. Okay, so first, I think it's important to point out that most people wouldn't automatically think of retail as an industry with a lot of evergreen stocks.
That's right, yeah. They tend to be super vulnerable to economic shifts, trends changing really fast, and of course, especially with online shopping becoming so huge.
It's cutthroat out there. So let's start with Walmart. They were struggling a while back, weren't they? I vaguely remember something about how Amazon was kind of, eating their lunch.
Yeah, about a decade ago, it did seem like Walmart was losing ground. But, instead of just doing more of what wasn't working, they actually made some pretty big changes. They slowed down opening new stores and focused more on improving their existing ones.
So less about expansion and more about making the best of what they already had.
Exactly. And building better customer relationships became a much bigger priority for them. Oh, and of course, they went all in on e-commerce and mobile shopping.
Smart move. I mean, if you can't beat them, join them, right?
Right. Ride the wave, don't fight it.
So they didn't just try to fight the whole digital wave. They kind of rode it. Did it work?
You bet it did. Get this, their revenue actually grew at a compound annual growth rate, that's CAGR, for those who don't follow that stuff, of 3% from 2014 to 2024.
I mean, 3% may not sound like a lot, but for a company as massive as Walmart, that's actually pretty impressive, right?
Oh, yeah, especially when you consider all the economic challenges over that decade. Walmart just kept steadily increasing its revenue.
Okay, so the past seems pretty good, but what about the future? Are they expected to keep this up?
Analysts seem to think so. They're predicting even faster growth, actually.
Oh, wow, really? Like what kind of numbers are we talking?
They're saying a 5% revenue CAGR and an 11% earnings per share CAGR.
Whoa, earnings per share, so EPS, right? So they're not just growing revenue, but also becoming more profitable.
Exactly. And that's from 2024 to 2027, so the near future.
That sounds very promising, but I'm curious, what about their forward price-to-earnings ratio? It seems like it's 37. Isn't that a bit high for, a traditional retailer?
It is on the higher side, but that's where this whole evergreen idea comes in. You see, that high PE ratio probably means that investors are pretty optimistic about Walmart's future growth potential.
I see. They're betting on Walmart's continued success, basically.
Pretty much, and it makes sense when you consider their scale, how diverse their business is now, and all those forward-thinking strategies they've been using.
You're talking about their investments in automation, digital expansion, that kind of thing.
Yeah, and their Walmart Plus subscription service is getting a lot of attention, too.
Interesting. So it seems like Walmart has really managed to defy the odds, kind of reinvented themselves for the digital age, like, they taught an old dog some new tricks.
That's a great way to put it. But now, how about we talk about the company that many blame for the downfall of traditional retail, Amazon?
It's the 800-pound gorilla in the room, so to speak.
Exactly. Amazon is a whole different animal. There's no other way to put it. They're the king of e-commerce. Over 200 million Prime members worldwide. It's just insane.
It's hard to wrap your head around just how big they are, but their reach goes way beyond online shopping, right? I mean, they've got Whole Foods, streaming services. Those electric devices are everywhere these days.
Seriously, everywhere. They're everywhere you look, and they're just getting started.
It's mind-boggling how much they've expanded. But here's a question that's always kind of bugged me. Their profit margins on retail are really thin, notoriously so. How do they manage that?
That's where their secret weapon comes in, Amazon Web Services, or AWS.
AWS. Fill me in here. I haven't actually heard of this. What is their connection to Amazon?
So AWS is Amazon's cloud computing platform, and it's the biggest in the world. You can think of it like the backbone of the internet. It provides the infrastructure for countless businesses to operate online.
Okay, so it's huge, but how does that help Amazon's retail business?
The key here is that AWS is incredibly profitable. It brings in a lion's share of Amazon's overall profits.
Wait, so are you saying that they're basically using profits from this cloud business to support their lower margin retail operations?
That's exactly right. While other retailers are struggling to make online work, Amazon can afford to play the long game. They can even operate at a loss in some areas if it means gaining more market share.
That's a pretty brilliant, if somewhat risky, strategy.
And it seems to be working. I mean, their revenue growth has been unbelievable. We're talking a 22% CAGR from 2014 to 2024.
22%, that's insane, especially for the retail world.
Right, and even though they're facing more competition and regulatory issues, they're still expected to do really well.
Okay, but I'm looking at their forward PE ratio. It's 36. That almost seems reasonable considering how dominant they are.
That's the fascinating thing about Amazon. They're not just an e-commerce company anymore. They're this tech giant, a player in the future of cloud computing, artificial intelligence, and who knows what else. So that seemingly reasonable PE ratio actually reflects just how much the market believes they're going to keep innovating.
So they're more than just a retailer at this point, almost like a tech company hiding in plain sight.
You got it.
Okay, so we've got Walmart, the legacy retailer who's reinvented itself, and then we've got Amazon, the disruptor turned tech titan. What about Costco? How do they fit in here? They seem to be doing pretty well in this world dominated by these two giants.
Costco is an interesting case for sure. They haven't just survived, they've absolutely thrived. And they've done it by doing things their own way.
They march to the beat of their own drum, so to speak.
Exactly. And their secret weapon? Their membership model?
Yeah, the whole you got to pay to play thing. I'm actually a Costco member myself. I love a good bulk deal. But how does that make them an evergreen stock?
It's all about those membership fees. Those fees actually allow them to offer those incredible deals you love because they're already making money before you even walk into the store.
So it's like a built-in safety net. They're making money regardless of whether people are buying a ton of stuff.
You got it. And their growth over the past decade really proves that it works. They've gone from 663 to 891 warehouses.
Seriously. That many new stores?
That's right. And the number of cardholders, it's skyrocketed from 76,000 to 136,800.
That's a lot of people paying for the privilege of shopping there.
And their global renewal rate jumped from 87% to 90.5%. That tells you something about their customer loyalty.
Yeah, once you're in, you're in. What about their projections for the future? Any insights there?
Analysts are expecting them to keep this momentum going strong. They're predicting a 7% revenue CAGR and a 10% EPS CAGR.
So even though they're not a tech giant like Amazon, they're still expected to see solid growth. But I got to ask, their forward PE ratio is 52. That's higher than Walmart and Amazon. What gives?
It's high, no doubt, but that's the market speaking, basically. They're confident in Costco's ability to keep doing what they do best. Investors are willing to pay a premium for that kind of consistency.
Okay, so we've got Walmart, the comeback kid, Amazon, the tech giant, and Costco, the membership masters. All very different companies, but they're all doing exceptionally well.
What's interesting to me is that despite those differences, they all share this one key trait. They've all adapted really well to changing consumer behavior and all the new technologies out there.
Like being flexible, rolling with the punches.
Exactly. They've embraced innovation, played to their strengths, and built these unique business models that give them a real advantage.
And, well, their financial performance really seems to show that their strategies are working. They're not just surviving, they're flourishing. But here's the million-dollar question, and maybe it's too early to say, but which of these evergreen approaches do you think has the best chance of lasting in the long run?
That's a tough one. Consumer trends are constantly evolving. Technology's always changing. The economy's unpredictable. It's a tough game out there, and the stakes are high. So what do you think? Which model do you think has the edge?
That's a great question. It's almost like we've got three pieces of the puzzle, but we need to see the bigger picture to understand how they all fit together. I'm starting to form some opinions, but I think we need to dig a little deeper. What do you say we explore some of the things that have really made them successful, like get into the nuts and bolts of their strategies?
I'm all for it. Let's see if we can really crack the code of their evergreen status.
Okay, so we've got these three retail powerhouses, each with their own unique approach to, well, pretty much everything. But what are some of the things, the kind of underlying factors that have helped them not just stay afloat, but really become these giants?
One thing that really jumps out at me is their focus on the customer experience. I mean, think about it. You can buy practically anything online these days.
Yeah, it's true. But these companies have really gone above and beyond to make shopping easy, enjoyable even.
It's not just about getting the product. It's about the whole experience.
Totally. Like Amazon has that one-click ordering and those recommendations. Sometimes it's creepy how well they know me, but their customer service is supposed to be really good too.
Yeah, it's top-notch. Really sets the standard.
And then there's Costco. Part of the fun for me is that whole treasure hunt vibe.
Oh yeah, you never know what you're going to find there.
Exactly. It's like a shopping adventure.
They've all put a lot of effort into creating these user-friendly websites and apps, making checkout super easy, and dealing with issues quickly. Even Walmart, with all their stores, has upped their customer service game considerably.
It's like they get that customer loyalty is something you earn, not just expect, especially these days when shoppers have so many choices.
For sure. Another key factor is their use of data and technology. I mean, they're incredibly data-driven, using information about their customers to make smarter decisions.
It's almost like they have a crystal ball telling them what we want before we even know it ourselves.
Haha, right. Like, I know Amazon uses my browsing history to recommend stuff, which can be a little freaky, but hey, it worked.
And it's not just about personalization.
Nope. Walmart uses data to optimize their supply chain, predict demand so they can keep prices low and shelves stocked.
It's amazing how much they can do with all that information.
Oh yeah, it's a real competitive advantage these days. And don't forget about technology. They've all embraced automation, AI, all the cutting-edge stuff to streamline their operations and enhance the customer experience.
It's like they're tech companies masquerading as retailers.
You could say that.
Okay, so customer focus, tech savvy, what else is in the mix?
Well, this one might surprise you, but it's sustainability.
Sustainability. How does that play into retail?
Well, these days, consumers are much more aware of the environmental and social impact of what they buy.
Oh, yeah, for sure.
And these companies have realized that sustainability isn't just good for the planet, it's good for business too.
I know Amazon's been making a big deal about reducing their carbon footprint and promoting sustainable practices.
They've really been stepping up their game, and it goes beyond just being eco-friendly. It's about ethical sourcing, fair labor practices, all of that.
Right. I remember reading something about Walmart working to reduce waste in their supply chain and source products more responsibly.
Exactly. They're showing that sustainability isn't just a marketing ploy. It's a core value that customers and investors really care about.
It's like they're acknowledging that being successful also means being responsible.
Right. Their long-term success is tied to the well-being of the planet. That's the message they're sending.
So we've got customer experience, data and technology, and now sustainability as key factors. It's like a triple threat.
I like that. A triple threat for success.
But it's one thing to adapt to change. It's another to be the ones driving it. Do you think these companies are actually changing the rules of the game?
Oh, absolutely. They're not just playing the game, they're rewriting the rule book. And one of the biggest ways they're doing that is by blurring the lines between online and offline retail.
So they're not just doing one or the other, they're doing both and making them work together.
Exactly. They're creating these omni-channel experiences so customers can shop however they want, whenever they want. It's all about seamless integration.
Omnichannel, I've heard that term, but I'm not sure I totally get it. Can you give me an example?
Sure, think about ordering something online and then picking it up at the store a few hours later. Or browsing products in a store and then having them delivered to your home.
So it's about connecting the online and offline worlds into one seamless experience.
You got it. And they're using data and tech to personalize the whole experience, which is something pretty new. They can analyze what customers like and then recommend products, offer specific discounts. It's wild.
It's like having a personal shopper, only it's an algorithm.
Haha, exactly. And then there's the convenience factor. Amazon's same-day delivery, Walmart's curbside pickup. It's all about making things easier and faster for the shopper.
It's like they're trying to eliminate any friction in the shopping experience.
They are, absolutely. But that makes it tough for other retailers to keep up.
It's a high bar they've set, for sure. So it seems like they're not just adapting to the changes in retail, they're actually leading the charge.
They're trailblazers, pushing the boundaries of what's possible.
It's exciting to see how they're shaping the industry. But I have to wonder, are there any downsides to all of this? What are the potential risks or challenges they might face?
That's a really important question, because even these giants have vulnerabilities.
Like what? What kind of things should we be thinking about?
Well, one potential threat is the rise of new competitors. There are always new players entering the market, and some of them are pretty disruptive.
You're talking about those direct-to-consumer brands, the ones that are cutting out the middleman.
Exactly. They can be really agile and laser-focused on specific niches. If the big players aren't careful, they could lose market share to these up-and-comers.
So even at the top, you can't get too comfortable.
Right. You got to stay on your toes, keep innovating. And then there's the whole changing regulatory landscape. Governments are paying more attention to how these big tech companies operate, and that includes these retail giants.
Yeah, I've definitely seen more headlines about that lately. It seems like regulators are getting more serious about data privacy, market dominance, and labor practices.
Exactly. And stricter regulations could impact their profitability and their ability to do business as they have in the past.
So they need to be adaptable, ready to adjust to the changing rules of the game. What about the economy in general? Could that impact them?
Of course. I mean, economic downturns, inflation, supply chain issues, all of that can affect consumer spending.
Yeah, when times are tough, people tend to cut back, even on essentials.
Right, and even companies like Walmart and Costco aren't immune to those effects.
So to sum it up, even these evergreen companies have to be aware of potential threats. It's not a guaranteed win. They have to keep adapting and evolving.
You hit the nail on the head. It's a constant game of chess, trying to anticipate the next move and adjust your strategy.
It's fascinating to watch it all play out, that's for sure. But now let's get down to brass tacks. We've talked about strategies and challenges, but what about the numbers?
Let's do it. Time to dive into the financials and see what the numbers tell us.
Okay, so let's get down to the nitty-gritty, the numbers. We've seen how these companies have adapted, innovated, all that good stuff. But how has all that translated to their bottom line? Like, are they actually making money?
Well, the proof is in the pudding, right? So let's start with Walmart. When you consider how much online competition has grown, their revenue growth over the past decade is pretty remarkable.
Yeah, I'm looking at the figures here. Their revenue grew at a compound annual growth rate, that's CAGR, of 3% from 2014 to 2024. Not too shabby, especially given all the economic ups and downs we've seen, but can they keep up that pace?
Well, analysts seem to think so. They're projecting a revenue CAGR of 5% and an earnings per share, EPS, CAGR of 11% from 2024 to 2027.
Whoa, so not just growing, but becoming more profitable too.
Exactly. It seems like their investments in e-commerce, automation, and that Walmart Plus membership are really starting to pay off.
Smart moves on their part. Okay, so what about Amazon? I mean, their growth has been nothing short of phenomenal.
It really has. I mean, we're talking about a company that achieved a 22% revenue CAGR from 2014 to 2024. That's almost unheard of in retail.
22%? That's crazy.
Yeah, it's a testament to their dominance in e-commerce and how much they've expanded into all these other areas.
Speaking of which, we talked about Amazon Web Services, AWS, earlier. That seems like it's been a real game changer for them.
It has. AWS contributes a huge chunk of their profits, which gives them the resources to invest in all this new technology, expand into new markets, even operate at a loss in some areas to gain market share. It's a long game, but it's working.
They're playing chess while everyone else is playing checkers.
Exactly. And it looks like that growth is expected to continue, although maybe not at that same crazy pace. Analysts are predicting a 10% revenue CAGR and a 17% EPS CAGR from 2024 to 2026.
So even with all the competition and regulations they're facing, they're still a powerhouse. What about Costco? They've been quietly putting up some impressive numbers too.
Oh, absolutely. From the 2014 to 2024, their revenue grew at a solid 8% CAGR, which is really impressive for a company that's mostly brick and mortar. Their membership model is incredibly resilient, even when the economy takes a hit.
Their members are diehards. They love that place.
For sure. And that loyalty translates into a lot of revenue. Analysts are predicting they'll keep growing, with a 7% revenue CAGR and a 10% EPS CAGR from 2024 to 2027.
So it looks like all three companies are performing well, have a bright future ahead of them. They're not just surviving, they're thriving. It seems like each of them has figured out their own secret sauce.
They have, but remember what we talked about earlier. There are always challenges, things that could change the game. New competitors, regulations, economic uncertainty. It's a constantly shifting landscape.
Right, they can't just sit back and relax. They have to keep pushing forward.
Exactly. But I think we've gained a lot of insight from this deep dive. We've seen how Walmart, Amazon, and Costco have each found their own way to succeed.
Absolutely, we've explored their strategies, the challenges they face, their financial performance, and what the future might hold for them. It's been a wild ride.
It has, and I hope it's given our listeners a better understanding of these companies and the forces that are shaping the retail industry.
Me too. Before we wrap up, though, I want to go back to something you said earlier about these companies changing the rules of the game. Could you elaborate on that a little? What are some of the ways they're actually reshaping retail as we know it?
Well, one of the most significant shifts they've driven is the rise of omnichannel retail. They've realized that shoppers want a smooth experience, whether they're online, in a store, or on their phone. It's about breaking down those old barriers between different ways of shopping.
So it's about making it all work together seamlessly.
Right, and they've invested a ton in the technology needed to make that happen. I think about ordering something online and then picking it up in a store a few hours later, or seeing something in a store and having it delivered to your house.
So convenient.
Exactly. It's all about giving customers options and making things as easy as possible. And then there's the personalization aspect. They're using data to figure out what you like, recommend products, even offer you special discounts. It's pretty amazing.
It's like having a personal shopper in your pocket.
Haha, that's a good way to put it. And they're constantly pushing for more convenience. Amazon with their same-day delivery, Walmart with their curbside pickup. They just keep making things easier and faster.
It's like they're in a race to see who can eliminate the most friction from the shopping experience.
They are. And they're not just focused on buying stuff. They're also making it super easy to return things, get help, manage your orders, the whole 9 yards.
It's really impressive how they're always anticipating what customers want, even before they know it themselves.
That's the key to staying ahead of the curve. But with all this innovation happening, what does the future hold for these companies?
Yeah, that's the big question, isn't it? What's next?
It's hard to predict the future, but I think it's safe to say these companies are in a good position to keep succeeding. They have strong brands, loyal customers, and they've shown they can adapt and innovate.
They're definitely not afraid of change.
Exactly. But they can't get complacent. They have to keep listening to their customers and keep finding ways to get better.
That's a good lesson for anyone in business, I think. No matter how successful you are, you always have to keep moving forward.
Couldn't agree more. The retail world is a perfect example of how fast things can change. The companies that thrive are the ones that embrace change and aren't afraid to try new things.
Well said. I think we've covered a lot of ground today in our deep dive into evergreen retail stocks.
It's been a great discussion. We've learned a lot about Walmart, Amazon, and Costco, but also about the bigger trends that are shaping the retail industry.
And maybe most importantly, we've been reminded that even in a world where things are constantly changing, there are companies that can achieve lasting success by sticking to their core values, but also evolving to meet the needs of their customers.
Beautifully put.
And on that note, I think it's time to wrap up this deep dive. Thanks for joining us on this journey. Until next time, keep those brains buzzing and keep seeking knowledge.